Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. So glad you're here. It's Friday. We made it to the end of the week. What do we got going on today? Got another down day in the market. Dow down about 700. NASDAQ down about 300. Market direction is definitely downward. But what did I do today? Well, I actually put some money to work today. I started to buy things. Now, why? Why am I starting to buy things? I still think the market's going to go lower, but nothing goes in a straight line down. We're overdue for a bounce. Now, why do I say we're overdue for a bounce? Well, I look at professional indicators. I look at what's called the McClellan oscillator. Okay, now you can type in these two symbols. Okay, type them in and you can look at, okay, the NYMO and the NAMO. One's the New York, one's the NASDAQ. These are the McClellan oscillators. All right, when they get above 60, that means it's overbought. When they get below 60, that means we're oversold. All right, right now the New York is down at minus 90, way oversold. NASDAQ down at minus 80, way oversold. Now this has happened where it's been below 60. It's happened four times this year. And each time we've had a rally within a week of that happening. A big rally, a big jump. All right, so I think it's time that the markets are going to bounce. Now, we're sitting about 365 on the SPY. A lot of people think this is the big crash. We haven't even got down to the June lows yet. I mean, how big a crash can it really be if it's, granted, we're on a Friday and we're closing out the market down. And a lot of times when we get down like 700-800 points on the Dow on a Friday, a lot of people think there might be a Black Monday. Could there be a Black Monday? Absolutely. But I don't think so. I don't think this is the big crash. I really don't. I think that we're going to bounce. Now, I do think we're going to come down on the SPY down to the 350 level, but actually we're sitting at 365 right now. I think we're going to bounce and then come down and go to 350, maybe even a little below 350 on the SPY. That's just my take on the market. You may have a completely different take. You may have the take that this is the big crash, that we're going down below 20,000 on the Dow, below 10,000 on the Dow. And that's perfectly fine. That's your opinion. It takes two sides to trade the market. If we all thought the same thing, we wouldn't have a market because nobody would take the other side. So what do we got? Well, I think the market is in a downtrend, but I think we're going to bounce. Just my take. We'll see how that all plays out. All right, let's move over to the housing market. Now, the housing market, we know the housing market has had this, well, it's had a 14-year run, a 14-year party, if you will. Anyways, the party is now officially over. The party has come to an end. Now, we used to have this short supply of houses. There used to be a housing shortage, and we're shifting to where we're getting a housing abundance. In new homes, we've already got the abundance. They can't get it sold. They have a year's worth of inventory, and they can't get them sold. It's going to take a year just to work off the inventory we already have, and they're building new ones, and they're coming on the market all the time. Well, okay, well, that's fine, but what about existing homes? Existing homes, the inventory is not all the way up yet. Now, why is that? Well, it's because we haven't allowed foreclosures. We haven't allowed them for the past 2 or 3 years because of the pandemic. They say you can't foreclose on people. But right now we have over 2 million. 2 million people are seriously delinquent on their mortgages. Okay, so in the old days what we used to do is we used to foreclose on them. And we're starting to do that again. The court systems are starting to allow the foreclosures to come through the courts. So there's over 2 million people at risk of foreclosure right now. Okay, so if you get 2 million homes coming onto the market, well, there's where your inventory is coming from. But that's not what I'm worried about. Okay, I'm worried about the 5 million people that went into forbearance. When you go into forbearance, that money's not forgiven. You still owe the money, and it'll be tacked onto your mortgage. So your mortgage is actually going up. It's kind of a negative amortization sort of thing. Your mortgage is getting bigger because you're in forbearance. Now, if you can't catch up, well, what what happens? Well, you're going to end up in foreclosure. You're going to end up in foreclosure again. But that's not what I'm worried about either. I'm not worried about the 2 million there. I'm not worried about the 5 million. Now, here's what I am worried about, okay? This is what kind of keeps me up at night. It's called the recession that we're in. That word. Can't say that word. Shh. Not in a recession yet. This will be the third quarter of negative GDP, but we're not in a recession. Just ask those, well, just we're in a recession, and it's going to get deeper. This recession is going to get big. It's going to last a long time. Now, in recessions, a lot of jobs are lost. Now, in this recession, it's predicted, not just me predicting, it's predicted 5 million jobs are going to be lost. 5 million. Okay, so what happens when jobs get lost? Well, right now, Mike, we have all these jobs right now. And that's true, we have jobs right now. But you get 5 million layoffs, those jobs are going to go away. People will not be able to find jobs. Now, you also have this thing called the wealth effect. The wealth effect. Okay. So the wealth effect is like when you go look at Zillow, a lot of people look at Zillow to see what their house is worth. All right, so in the past few years, you've been looking at Zillow, and it's been going from 600,000, 700,000, 800,000, 900,000. Your house has been going up. But now when you go to Zillow, it's kind of going 900,000, no 800,000, no 700,000. It's getting reverse wealth effect, okay? So the wealth effect affects people. They don't go out and spend as much money. Look, when your 401k gets cut in half, okay, let's say it gets cut in half, you don't go out and spend a lot of money. When houses get cut in half, when it goes down on Zillow, people don't go out and spend as much money. If the stock market does crash and we go down 70 or 80%, people are not going to go out and spend as much money. And this creates a bigger recession, a longer recession, because we're in that downward pattern. We're in that downward drift. Now, okay, so when you got your 401k cut in half. Okay, look, here's the thing. All right, so right now, let's say the stock market's down about, I don't know, 25% on the S&P, maybe 30% on the NASDAQ. But let's say it closes down 30% for the year, right? And let's say you had your money in the market. Well, you're down 30%. But no, it's worse than that. It's worse than that. Look, you got to take into account inflation. What inflation do to the money that's left over? Let's say you had 100,000 in the market and you lost 30%. You're down to 70,000. But inflation took another 20%. They'll tell you it's only 9 or 10%. But we know it's really about 20%. So that took another 20%. You lost 30% and you lost another 20% inflation. I mean, these are just rough numbers, but you've lost 50% of your purchasing power, 50% of your money that you had at the beginning of the year back in January. Now you have 50% less. That's called the wealth effect. Now, do you really want to go out and spend a lot of money at this time? No, you really don't want to go spend a lot of money. You want to save money because all your money's going away. It's vanishing into thin air is really where it goes. When the houses go down 50%, where does it go? Well, it just kind of vanishes. You had all this equity. Now you don't have this equity. And you used to have this, it was kind of like a lifeline, right? If you needed money and you owned a house, you could just go out and refinance. You could get it $50,000, $100,000, and then you could live off that money to keep your lifestyle up. Well, those days are over. Those days are over. You refinance now, you're going from a 3% to a 7%. So people are going out and get these things called HELOCs, home equity line of credit, right? They go get these home equity lines. And, well, what do they do? Well, they can't pay them back. They spend the money, and they don't have the money coming in. This is a recession we're going into, and it's going to create another 5 million jobs gone, maybe more. Look, if you're like an older person like myself, right? I'm semi-retired. I still sell houses. I'm still a real estate broker, and I like doing that, and I'll continue to do that as long as I can. But a lot of people are going to have to go back to work. They're going to have to go back to work because their money is disappearing with inflation, with the stock market crashing. So they go back to work. They go looking for work. You go looking for work when you're in your 60s. You know how hard that is to get hired? Look, there's a lot of age discrimination out there, but all these people are going to be back on the street looking for work. They're looking for jobs, but the jobs have disappeared disappeared because we're going into this recession. Look, there's a lot of problems coming for the housing market, but what no one's talking about, they're not talking about all the foreclosures that's coming on, the 2 million people that are delinquent, the 5 million people that are in forbearance, and the 5 million people that are going to lose their jobs. This is not going to end well. We're just in the first inning. Look, I understand that people go, but Mike, in my area, things are still going up, and that's fabulous. That's great. That's wonderful. It's not going to stay that way. I'm sorry. It's just not. Look, when you get 5, 10 million homes coming on through the foreclosure system, it is going to send this market a lot lower. We're in the first inning. It takes time to play out. You come back here this time next year, and it's going to be really ugly. I'm telling you, 2023, ugly year. But you come into 2024, well, we might get those opportunities. We might get those half-off sales, maybe even a little more. Maybe we go down 60%. Oh, that freaks a lot of people out when I say down 60%. Is that possible? I believe that it is. Now, it's just my opinion. I know you've got an opinion, and I know in your area they only go up. I get that. And you're entitled to your opinion. And don't just listen to me. Go listen to others. Look, I think the stock market's going to bounce from here. A lot of people think we're just crashing. This is the big one, Mike. This is it. Hold on to your seats. Look, the debt market's getting ready to explode, and it is. It's getting ready to explode, and it will some point. Maybe not now, though. Maybe we get a bounce. Maybe it doesn't explode till next year. And when it explodes, you're going to know about it, because the stock market, oh, it's going to be painful. Now, it's always Friday that I get into these rants about, how the world's coming to an end. The world is not coming to an end. We will get through this. We will continue on. Get out there, everybody. Have a great weekend. If you like this rant, give me a thumbs up. Why not? We got the weekend ahead. I'm Tall Mike. Bye-bye now.